This is the Epoch Times.
Welcome to Epoch Audio, showcasing the best journalism covering news, culture, and society, addressing issues overlooked or avoided by other media. For the text version of this and more articles providing truth, tradition, and hope, please go to theepochtimes.com.
The Writings on the Great Wall for a China Crash by James Gorey. As the saying goes, if you want to know what's really going on, follow the money. That catchphrase doesn't just apply to foreign companies and investors backing out of China. It also applies to the Chinese economy. A no-confidence vote. In the midst of widespread economic duress and growing social disruption, following the money trail shows how Chinese investors are voting with their wallets. Consumer spending is down and the savings rate is up. Capital is flowing out of China any way it can, and it all amounts to a definite no-confidence vote for Xi Jinping and the Chinese Communist Party, or CCP. The CCP tries to hide the facts. In true CCP fashion, the state puts the blame for its failed policies on those who point them out. Anyone who mentions the crumbling economy, for example, is guilty of endangering financial stability. Even though the CCP would consider prosecuting journalists and economists who report accurately about the falling employment numbers and the high debt levels that plague local governments, China's worsening economic conditions are too dramatic and widespread to hide. Of course, financial stability isn't threatened by people talking about it. It's the CCP that's destroying the economy. Even recent history shows that the less involved the party is in the economy, the better it performs. The property market and the development sector are perfect examples, although not the only ones. Both continue to be heavily manipulated by the CCP, and both are hemorrhaging value as financial ruin and flagship companies such as Evergrande and Country Garden contribute to deteriorating conditions in the wider economy. Completed projects that remain unsold are being demolished, work on existing projects is being halted, and other development plans are being cancelled even as the development companies owe billions to creditors. More than a cyclical downturn. The reality of what's happening is starting to dawn on the Chinese. Many understand that the current trend is much more than a cyclical downturn, which is typical of capitalist economies. Growth in the second quarter of 2023 was reported to be only 0.8%. Still, that statistic is hardly trustworthy in a country that runs on graft and political favors and routinely fudges the numbers. The reported third quarter gain of 4.9% is touted but not believable, given the real estate collapse, falling consumer spending, and lower exports. Going forward, as the CCP takes more control, a stagnant economy may be best-case scenario. Jobs in property development, related industries, and manufacturing sectors are all struggling as foreign companies leave China's shores. A stagnating middle class. Meanwhile, individual investors, mostly from the middle class, who put their life savings into properties that aren't even built and likely won't ever be built, are seeing their wealth evaporate before their eyes as valuations crater. This stagnation is due to internal policies and external ones. Internally, an economy based on graft and corruption rather than one based on market signals, such as the price mechanism that allocates resources and assets where they're most needed in the economy, can't sustain itself. Thus, turning profitable private enterprises into debt-ridden state-owned enterprises, which is a euphemism for confiscation by the CCP, has destroyed entrepreneurship, the economic engine of China. Add to that the CCP's fundamental shift from economic growth to internal security and stability. It's a vicious cycle wherein more party control results in less economic activity, financial duress, and civil discontent. The party then doubles down on more state control and more oppression. In short, the party is more concerned with maintaining its grip on power than it is with growing the economy or supporting the middle class. Companies are fleeing uninvestable China. But there are external factors, or consequences, as well. Over the past year, the flight of Western manufacturers out of China has accelerated. American and European firms are seeing the writing on the wall. They see the world's growing disenchantment with Beijing's trade and foreign policies, with many anticipating a decline in economic stability and a greater degree of decoupling from China in the foreseeable future. As a result, they're relocating their operations out of China to friendlier nations. Friendshoring making things worse. This trend is known as friendshoring. In essence, countries such as Vietnam, Indonesia, India, and Mexico are capturing companies exiting China. They offer less political risk, friendlier trade policies, and lower labor costs, and are closer to markets. Barring any major shifts in Chinese leadership, companies leaving China are unlikely to return, which is a growing economic and financial gap for the CCP to fill. Youth unemployment rate at record high. Other symptoms of the collapse are evident, such as the soaring unemployment rate for young people. It's now a reported 20%, but counting those who live with their parents for financial reasons, it's likely approaching 50%. Underemployment makes that picture even worse, which is leading to an angry younger generation. Disaffected youth who see no good options for a better future can be a volatile force to reckon with. The race to exit Chinese real estate. All of these factors and others are why some wealthy Chinese have been selling their China properties as quickly as they can. They're desperately trying to move their money out of China and invest abroad before Chinese real estate holdings lose even more value. They know the trajectory of the Chinese economy and want out. Many are buying real estate in Japan. It isn't just proximity attracting Chinese investors to Japanese real estate, although that's a significant factor. Another enticement is that owning real estate or a profitable business in Japan can lead to long-term or even permanent residency visas. That gives Chinese investors an easy way out of the country to avoid the coming meltdown and the iron hand of the CCP. The China miracle is no more. Thank you for listening to Epoch Audio. This was The Writings on the Great Wall for a China Crash, written by James Gorey and read for you by Chris Rod. Views expressed in this article are opinions of the author and do not necessarily reflect the views of the Epoch Times.
For more Epoch Times articles in text, please visit theepochtimes.com.
This is the Epoch Times.